One of the things that we talk about quite a bit as CFOs, and specifically fractional CFOs, and even kind of more ingrained is, those who raise capital and who do like I do, mergers and acquisitions, quality of earnings, financial due diligences. A good CFO, not just accountant, controller, backwards looking, but CFO, strategic, forward looking, has to be able to tell the story.
Cool. Thanks for being here, Patrick.
Hey, what's up, Dalton? How you doing, man?
Good, man. So you're
having me.
Yeah, absolutely. I'm glad that we, grateful for Matthew to be putting us all together in that really great group. I think what's really fun about that group in particular is it doesn't matter what it's branded. Like everybody's just having a lot of fun.
Absolutely.
But now you have quite a bit going on, and you've been like all over the place, right?
Yeah.
As far as your own businesses, right?
Right.
Dude, I love that. So fractional CFO.
Right.
We've had a lot of like these fractional business owners come in, right? Who would start their career. Do you think that if you were gonna start over, you'd do fractional like CFO again, or would you try to like get in with a company and maybe ride that for a little bit, or what?
Great question. No, I do exactly what I'm doing right now. I love it. I absolutely love everything about it. It's something that's just fun. It's the way my story and how I got into it was a blast. And I'm even doing my MBA. We talked about that before.
Oh, yeah.
So congrats to you for
Thank
doing yours. I think you're a little ahead of me. So, and you're at SUU, right?
SUU, yeah.
Okay. My son's down there.
Oh, that's cool.
And then, I'm at UVU doing my MBA, and a lot of people are asking me, hey, what you going to do when you're done with school? I'm like, exactly what I'm doing right now.
Okay. Let's dive into this topic. Why'd you decide to go get your MBA?
It's something I've wanted to do for years and years. I mean, when I was in undergrad, I got my major in Spanish, minor in business, because I wanted to be different and go to grad school and get my MBA. That was like 25 years ago.
Okay.
And so finally I'm doing it. It's just one of those things where time and money, right? Time and money always gets in the way.
Yeah.
So my wife and I are like, no time like the present. Let's do it. Let's get it done.
UVU, is it online? Or are you in
No, in person.
In person? Okay. Yeah. I'm only online.
Yeah.
So SUU has an online program that was like a year.
Oh,
it was like an accelerated year long. So you did all 10 classes.
How many?
10 classes.
How many classes you doing right now?
So I have 2. I'm in my last semester.
Good.
So I'll get it. But it's always interesting to hear about the whole MBA conversation, right? Do you feel like, so you're a fractional CFO, major in business, minor in Spanish. Did I get that right?
No,
flip-flop?
Opposite, flip-flop. Major in Spanish, minor in business.
What were you going to do? Man?
So I originally wanted to do engineering, computer engineering, and just learned very quickly, even before school. I'm like, nah, that's not my thing. I wanted to do business. I wanted to do international business.
Okay.
And that's why I majored in Spanish, minored in business. And my plan was to go straight through and get my international MBA, like at Thunderbird or something like that.
Oh, okay.
Then, life happens, family happens. And I just didn't.
Right. So how did you get into that's crazy. How did you get into CFO? It was 25 years ago. Did you have to was there a lot of certifications to like be a CFO or anything like that, or what?
There can be. I'm not. And so I'll walk you through I'll answer the certification question first and then walk you down my path. So there's certifications, like, of course there's CPA, then there's CMA, and stuff like that. I don't have any of that.
Yeah.
I never wanted to.
Yeah.
CPA is like, more for, people who want to do public accounting, whether it's audit or tax route or something. I never had that interest.
Well, you know what's funny about
tests? Yeah. I freaking hate tests.
But you know what? But you hate tests? Is that what you said?
I do.
Yeah. You didn't have to take the GMAT.
Nope. That's another reason why I went to UV. I do not want to take the GMAT.
I don't think anybody requires it anymore.
It's
maybe the Ivy Leagues. Yeah. Maybe the Ivy Leagues do. But most, like I got accepted to SU and Iowa.
Nice.
And neither of them accepted GMATs. So anyway, or cared about if you had a GMAT. What I was going to say was, what's funny about CPAs, because everybody's like, I want a CPA to do my taxes.
Yeah.
You know this, but you take 4 exams to become a CPA.
Oh yeah. It's completely rigorous.
It's a year long.
Yeah.
Not one of those tests has anything to do with taxes.
So I didn't know that.
Did you know that?
I don't even know much about the CPA.
No, what's great. Yeah. So there's only 2 people who can represent you to the IRS, right? An enrolled agent.
Okay.
Which you can do if you take a test or be an IRS agent.
Yeah.
Or a CPA. But a CPA, I mean, they know taxes, but they didn't have to it wasn't part of their test.
Interesting.
So like when people are like, I want a CPA to do my taxes. I'm like, why? Like a tax accountant was just as good.
Yeah.
Especially if you have somebody who has like a.
Well, and I don't do taxes. I hate taxes. I even have a CPA that I love and he does mine.
Yeah.
For me, but it's fractional CFO. There's like so many different, avenues you can take with that too.
Right. Cause there's a lot that a CFO does in general. Right. So do you typically, we talked about one of your clients before this, but do you typically what industry do you like to be in?
Well, so it may help to understand a little bit more about like how I got into becoming a fractional CFO. And then I'll tell you more about the industry that I'm involved in. So my story was, in school, worked for Citigroup, accounts receivable. And then I went for Citi Cards for Citi Financial, did mortgages and stuff, moved out here to Utah. Started doing mortgages and real estate investing, and then got picked up by a group of restaurants out here and became their corporate controller and acting CFO. Yeah. And then I helped them to grow, quite a bit. And that was a super fun run, and stayed with those guys for a bit. Yeah. A lot of their investors would come in, the shareholders, and would say, hey, can you help me out? I need a little small CFO over here, to help me out with some stuff. And finally, after a few of those, I'm like, man, I might as well just do this kind of on my own. So I, gave my resignation. We hired a couple of guys to replace me, and they're still there. They're fantastic. I still stay in touch, with a lot of people there. And then, I was an independent fractional CFO for several years and helped a lot of companies. While I was with the restaurants, let me kind of back up for a sec. So the owners would come in and basically say, hey, PMAC, we bought a couple of restaurants, we sold a couple of restaurants, and we need a valuation done on these couple because we're going to sell them next month, and I'm like, I have no idea how to do this stuff. So I had to learn on my own, and I loved it. It was exciting. It was fun. It was crazy. That's why I'm bald, but it was just super exciting for me, and so that was kind of my taste of mergers and acquisitions. Fast forward, did independent consulting for a bit, and then joined, at the time was called Advanced CFO, now called Amplēo. We've gone through a rebranding, right? And then when I first joined, one of the partners called me and said, hey, I've got a deal I'd love to put you on. Do you have a whole ton of capacity right now? The deal was that this company, this client, was getting ready to be bought out, was approached by a private equity investor. And then they didn't have any financials ready. They needed financials cleaned up, presented, board deck done, things like that. Yeah. So I did that, there again, just learned it, how to do it. Loved it. Well, after that deal got closed by the private equity group, partner came back and said, do you know what you just did? You did quality of earnings. I'm like, what the freak is that? No idea. Never heard of it. Didn't know. So I started looking into it, and he told me, what it was, how much, people usually charge for that, how long it takes. And I just said, well, why don't we develop this for Amplēo? Yeah. So I did. And now we have, a team and everything involved in it. We've got a few of us that do quality of earnings. We got a bunch that do financial due diligence. And for me, it's a blast. So that is a fun piece. Focus on that.
That is a fun piece. That's why I got my accounting degree. Oh, I got
that's how you know so much about my
MBA
stuff.
Yeah. And my MBA is finance. So I know a lot of numbers. Yeah. So, but I'm a sales guy. I'll never go into finance. But the cool part that's the cool part. Is because what gave me a really unique ability, because everybody's like accounting and sales don't really go together, but that's my unique advantage in the marketplace. Because like, if you understand sales and accounting, then that like, because then you get with somebody who's like, we need to exit. Well, if you need to exit, you're not going to
growth and know your numbers.
Well, growth and know your numbers. Yeah. And like, they're like, for the most part, like they're not going to take your, a private equity firm is not going to take your bank statement stuff.
Right.
They're going to need it cleaned up and audited, and you're going to need it like, and have it like buttoned up real tight.
Exactly.
And nobody really understands, like if you're a sales guy or an ops guy, like you don't really understand unless you've gone through it, like the money, and sales is all about money. So why wouldn't you want your salesperson to be an accountant, or to like at least have a basic understanding of how this affects the bottom line?
That's a great pitch. I like it.
Absolutely. Yeah. I mean,
That's true. Yeah. I mean, it's a good point.
When I was going to work for an accounting firm, all they talked about was my sales thing.
Yeah.
Like they asked me one accounting question where it was like, what was a pivot table?
Oh, right.
And I answered
That
it.
used to be my favorite question when I interviewed accountants.
I was like, what's a pivot table? I was like, I don't know. Is this 1980, bro?
Right.
What are we using pivot? I was like, it's a way to like, it's a data visualization tool.
Yeah, there you
It's
go.
like we can figure. I was like, but like we have way more than that. Anyway, but I joked with him because I knew I could hit him like that, and I got the job.
There's an app for that now.
Yeah. I'm like, dude, we cannot use a pivot table, dude. I was like, I thought they were going to ask me about like SQL or something like that. Like, you know, that kind of crazy did it. Or what else do they use for data visualization now? I took a class for it. Anyway, it was terrible. I was like, statistics was not my jam.
I've never taken statistics.
Yeah,
I had somehow gotten through my undergrad, and for some reason, it's not on my MBA program. And I'm so glad.
Yeah, are you doing like a general one? Or?
No, I'm doing finance.
Oh, really?
Yeah.
You didn't? That's crazy. That's
I have
cool.
been
Good
able
for
to
you.
slide under the cover without
for you, dude.
without any type of statistics, and I'm
Yeah.
still like I love
They
I
swap.
love how numbers go and
Yeah.
stats behind them, but the course stats,
Oh
yeah,
my
I'm
gosh,
screwed.
dude, yeah, that's
There's
super-
no way.
Well, what's interesting is the courses that they've swapped. So when my mom got her accounting degree, it was a lot of calculus.
Yeah.
They swapped those calculus for statistics. So I've taken like 3 or 4 statistics classes, and every time it's terrible.
Yeah.
But don't ask me any questions because I don't know.
Yeah.
I was like, dude, this is like. I was like, I'll put the function in Excel.
That's me. Exactly.
Hey,
yeah.
That's an industry ripe for disruption. Excel, dude.
Oh yeah.
I mean, it's like still the most powerful tool, but you gotta think like, dang, man.
Well, there's
With
coming
AI
out with a
coming
lot
out.
of new formulas, and there's a lot of like I follow a lot of people on LinkedIn that do just straight new formula trainings and everything. It's really crazy.
They do.
And I'm
They
a
get
simple guy, and it felt like I don't know how to do the macros and stuff like that. I don't care.
Yeah.
But there's a lot of like a lot of people use VLOOKUP and HLOOKUP, and I like XLOOKUP. I'm like, that's super cool. Just that is a simple one, but that alone blew me away.
Yeah.
It's my new favorite formula.
Well, you can do so much in Excel for sales. Like I've had people come up to me because they're like, "You're an accountant, you know Excel." I'm like, "I know it pretty well." And they're like, "We need this table built." You know, it's sick. We're gonna plug ChatGPT here for a second. Do you know what that?
I've used it a little bit, but
you can use it for Excel.
I've heard that it is like somehow built into Excel or something now.
Well,
I saw someone the
I
other
think
day
you
said
can-
something about that.
I don't know. I haven't gone that far down the rabbit hole, but I know that like you can. Hey, what should I do in Excel if I want this? Like, how should I build this? And it'll help you build it right there.
Dang.
Yeah, it's crazy, bro. It's actually kind of creepy how it's replacing even like coders. Like ChatGPT is nuts, dude.
That is crazy.
But good for them though. ChatGPT, I'm glad we get to talk about it. How do you feel about it?
I think it's a great tool. I don't think it's going to replace a lot of stuff, but I think it's a great tool to use to give you ideas to help kind of spark some stuff.
Yeah.
Like in my MBA course, we've plugged in a bunch of questions, not to use the response, but to kind of give us some direction.
Yeah. But my thing is like, dude, all the teachers who are mad about ChatGPT right now, like doing writing or whatever.
Oh yeah. My teacher's like, don't use it. I can tell you did. It sucks.
Well, like here's the thing though. But the funny thing is like these are the same teachers who like 30 years ago were like, you're not going to have a calculator at your desk every day.
That's
like,
true.
I have my phone, so I don't actually need, you know what I mean? Like, or like even I took my accounting degree so long ago that even I remember most, like at the beginning of my degree, people were like, you need to know this because like, your employers are going to want to know, and then slowly transition to like, just plug it in Excel.
It's like, you better know how to use that BA2 plus, man. I tell you what,
You're
you
like,
better know every single function on that calculator.
And I go, no, because now we just have Excel and it does it for us. And like, it takes all the brain. But it's funny because like, they were even talking about accounting kind of being taken over by AI. And I was like, that would be great.
I remember when they were talking about that.
That would be cool.
And they still are a little bit.
For me, that would be great because it doesn't matter. Like, and you're a CFO. So give me your thoughts on this. When you're a business owner, you can lay down an income statement in front of a business owner, and those numbers don't mean anything to him.
Right.
You have to you have to walk them through that statement. Yeah. And so accountants are more consultative in nature by now anyway, because like QuickBooks will run your books for $150.
Right. Well,
but and they'll give you good stuff.
Yeah.
But like you don't know what it means, right? You don't know what
It's-
it.
Well, so one of the things that we talk about quite a bit as CFOs, and specifically fractional CFOs, and even kind of more ingrained is those who raise capital and who do like I do, mergers and acquisitions, quality of earnings, financial due diligence. Is a good CFO, not just accountant, controller, backwards looking, but CFO, strategic, forward looking, has to be able to tell the story. Because that's what, like you said, an income statement means nothing by itself. A balance sheet means nothing by itself. Statement of cash flows means nothing by itself. But when you put those three together, and then you can be able to walk through, hey, what did this do? How did they do it? What does that mean for you as a shareholder, investor, whatever? Then that's the story that the financials can really tell.
And you know what, dude? Let's go down this rabbit hole because it really pisses me off. I got my accounting degree. I hate the finance gurus online. Do you see them?
Oh,
I'm talking about?
Oh yeah.
Like I know you do real estate investing. So this isn't every real estate investor, by the way, but it mostly happens in real estate investing where you hear like terms like assets and cash flow and all this stuff. And when somebody, and I clown them every time that I get a chance to, because somebody goes like, what's an asset? And they're like, oh, it's something that produces cash flow. And I'm like, you are an idiot. I'm like, this is so frustrating. They're like, your house is a liability. I'm like, nope, it actually isn't. Yeah. And if you put that your house is a liability on a sheet and you're going to go get bought by somebody, that's called fraud.
Right.
But you know,
right? That's true.
It is. But if I put, no, my house is a liability because it costs me money. No, that's not. But see, like people,
the mortgage is the liability. The house is the asset.
Your note is a liability. Your house is the asset.
Right.
And what's funny is like, because you know this, right? A lot of businesses can be profitable and still go out of business because they don't have cash flow.
Exactly.
And a lot of people who think they have really good cash flow aren't necessarily profitable. Yeah. Like cash flow doesn't mean profitability.
Exactly.
And profitability doesn't mean
that's
income.
why you need all three statements together at the same time on one sheet, preferably, which is how I build them too.
Yeah, I like that.
Then that way you can actually see how the flow goes.
Right. But you know what's crazy is like people are like, I hate the financial literacy in this world right now. It really irritates me because people don't get
how you really feel though.
Right. I've clowned them many times. I don't know how you feel about this, but I think Rich Dad Poor Dad was one of the worst financial books ever written in life.
I loved it. It was a big kick for me.
Well,
but it is a sales book, so I would think that you would love it, but you don't, huh?
So Rich Dad Poor Dad is great for people who like needed that kid, because he made a lot of good points in there. Like you need to own your destiny.
It served a great purpose for that time.
Yeah. For that time, like a lot of people needed a swift kick in the ass to like go do something for themselves. Totally. That's one piece that I like it, that's why I phrased it very specifically. I said worst financial book that
I see
because everybody's like number 1 book on finances, Rich Dad Poor Dad, and I'm like, nope. That's not it either, dude.
It's like a motivational book.
It's like get off your ass.
Yeah.
Go take control of your destiny.
Yeah.
Because there's nothing wrong with real estate investing. Right. There's nothing wrong with any of this stuff.
Right.
It's just when he starts to it's just you get in really dangerous territory when somebody has never been a business owner. They read Rich Dad Poor Dad because they think it's going to tell them about finances. Right. And then they start doing stuff like my car's a liability. And I go, okay, well, really, if I took your car away right now, would you make more or less money? Well, I'd make less money. Okay. Well, then it's an asset because it produces.
That's a great point to put. I love it.
You know what I mean? But you would never put your car. And I was like, and by the way, owning a car, if you have a business, provides a lot of the same tax benefits as a house. Depreciation, amortization, you can do a lot of because your house is anyway, I'm like, dude, people start telling me.
Fun rabbit hole.
Yeah. I'm like, dude, people always told me like, don't buy depreciating assets. And I was like, do people ever tell you that?
Oh yeah.
What do you tell them when they say that?
It depends. It's like most of my answers are like, it depends. It depends upon what you're looking for. It's like, okay, so my finance class, we're talking about portfolio analysis.
Yeah.
Well, what's a risky investment? It depends.
Yeah.
It depends on the person. What are your goals? Where are you at?
Yeah. What is the investment? Yeah. What's the investment? Like, what's the structure of the deal? Because they're going to be a lot of service. But I just always get frustrated because I'm like, no, depreciation actually is useful tool for businesses to provide.
So on that note, and I'm going to go down another vein for
yeah.
So talking about accounting, QuickBooks, Excel, and of course we know that there's a ton of ERPs out there.
Yeah.
So I was at an event. I was a panelist last week, and someone says, hey, if anybody is on QuickBooks, get off. If you're over 5 million, get off of QuickBooks. Which I can understand that because QuickBooks is simple. It's great. It's easy to use. And there's some functionalities that just do not work in it. Inventory is one of them.
Yeah.
However,
I can see that.
At the same time, and I brought it and I say, hey, you know what? I said, here's the thing though. It all depends upon what they're doing and what they're looking for.
Yeah.
Because I've done financial due diligence. I did a quality of earnings for a company last year. It was about 105 million in revenue. It was an inventory and software company. They built huge GPU computers for anyway.
Yeah.
And they had a software.
So they had inventory. Okay.
So they had inventory, but they used QuickBooks Online specifically. Now they had done it right because I had all the other APIs. They had Fishbowl, and everything.
Right.
But it was run really solidly. So I'm like, rather than tell people, here's what you can, here's what you can't, here's the black line, stay on this side. I'm like, you know what? No, I like to provide options and help people understand what the consequences of each options are.
Yeah.
For example, I advise a lot of companies on getting ready to sell. Okay. That's part of the financial due diligence. And I'm like, well, what if I sell today versus next year? I'm like, well, it depends on what you're looking for.
Yeah.
If you sell today, here's what happens. If you sell in a year from now, when you have this growth, here's what happens, how long there's no black or white. There are in a lot of things, but in most things, it really depends upon you.
Yeah. And that's the answer of it. Like I remember my first accounting class was like, he's like, when you ask an accountant anything, the answer is always, it depends.
What's 1 plus? Here's one of my favorite interview questions. What's 1 + 1?
It depends.
It depends. What do you want it to be?
Yeah, exactly. My mom made the joke.
Like, that's fraudulent. I'm like, well, hold on a second, though. So, 1 + 1 what? Are you talking about just numbers? Or are you talking about individuals? Are you talking about synergies? I mean, it depends.
Well, and that's
let's look at a financial model and run scenarios here for a second. Really show what 1 + 1 can equal.
The joke is, a math teacher gets asked, a math teacher, an engineer, and an accountant all get asked the same question. What's 1 + 1? And the math teacher goes 2. The engineer said 1 + 1. 1 plus what of 1 plus what?
Yeah.
And the accountant said, what do you want it to be?
Yeah. Yes.
Because it really depends. Right? It really does. Yeah. So what a great joke, by the way. It's and by the way, like we just had this conversation with my family the other day about like the SEC and the IRS. Like I don't actually. That's why I kind of got out of that game too. The IRS, the tax game specifically, the IRS is the Gestapo, bro. Right? They can just do whatever they want. Like I remember sitting on the phone when I was doing taxes one time, and I'm like, "No, she's like, you calculated it wrong," and I go, "No, I didn't." And she sends me, like we're in real time. She emails me this thing, and I go, "No, see, you missed this."
Yeah.
And I go, "This is what I got it right," and she's like, "Okay." And then we hung up the phone and I'm like, cool, we're done. Yeah. Like, cause they were auditing a client of mine and they owed him money. Okay. And then 10 days later, got an email. They're like, you owe us the money. No more appeals or anything. Pay us or you get,
right.
Like we had proved them wrong. And they were like, basically we don't care. And you owe us money.
Yeah. We'll find it one way or other.
Yeah. So I just told my client, I was like, look, you can hire a tax attorney, but for the money that you're going to pay them and fight this, you might as well just pay it.
Yeah, exactly. You spend less paying it.
Yeah, exactly. But anyway, dude, it's just, it's wild. But do you get a lot of like, how do you feel the landscape is with the companies that you work for? How do you feel it is with financial literacy? This is a big topic for me. How do you feel like it is for business owners?
Like in other words, what's their understanding?
Yeah. Do you feel like they're pretty financially competent?
I feel like, and it really,
you don't have to give me names, but I just want a general feel.
Right.
Of over 25 years.
I'm going to share a horror story that turned into a success story for you. Okay.
All right, cool.
So last year, I think it was last year. No, it was 2 years ago. Contacted by an iBanker, an investment banker, and said, hey, and they're out of Boston. They say, hey, we've got a local company, close to you. We're getting ready to run a book on these guys so they can go sell, merging 2 companies, and we would love to bring you in to do a sell side quality of earnings. Okay. And so I went and talked with, both the owners, because what was going on is there were 2 entities, they were merging, and then they were going to sell to a buyer. Both of them had, great VPs, finance, CFOs, and everything. One of the companies, the CFO was like, he was not a CFO. He was an accountant at best. And, they both kept saying, yeah, our books are clean. Our books are ready. We know our numbers. We know our unit economics and everything. No, they didn't. It was horrible. It was rough. So what started in March that was supposed to end in May, what started in May, it was supposed to end a couple of months later, didn't get closed until March of the following year because we started the quality of earnings, paused it, brought in a handful of consultants to clean up books, to merge books, to help with a lot of the ops side and everything, along with the merging and everything. And then we're able to go ahead and finish the sell side quality of earnings. And then they had an incredible exit in the end. But man, I tell you what, they were not ready. They thought they were. Like they called me, they're like, yeah, we're going to sell tomorrow. No, you're not.
You're gonna sell.
And that's it's a horror story, yes, but it's fairly common.
Right.
We see that a lot now. And it's one of those things too, where I don't want people to think, oh my gosh, my books have to be 100% pristine. No, they don't. That's what we do at Amplēo.
Yeah.
We will come in and we do a lot of fractional CFO type stuff.
Yeah.
So we'll come in, whether it's, raising capital, or you need a controller or whatever, but we'll come in and help you clean books and get them prepped.
Yeah. At some point though, as a business owner, you do, I understand where you're coming from. You don't have to have them clean, like buttoned up tight, ready to sell, but
we'll help you get them.
Tight, ready to sell. That's what I'm saying. Yeah. That's right. Yeah. But man, I know business owners who I'm like, dude, you got to know how this money flows in your company.
Oh, there are going back to your question, there are a lot who have no idea about the cash flow. A lot of them think they do. Right. But when we show them, we get in and we really clean up the books then show them and they're like, oh, that's where my burn rate really is. One of my clients love them. I've been on them for the last few years. They're selling to their employees right now, not through an ESOP, but just through an actual transaction and everything. Yeah. And every month when I meet with them as their CFO, I show them in a graph details and walk them through. Here's where your net working capital is trending. Okay. Here's your runway. And they're like, we got to right this ship. And so finally now after the purchase happens, they've got some things that they're going to do to right it.
How do you think it gets that bad with companies, man?
A lot of times
you're just not paying attention to it. So it's
for a lot of reasons. Number one, they don't know, and they don't know that they don't know. Okay. Or B, and this is the thing that I see quite a bit. Well, we have cash in the bank. We've got $500,000 in the bank. We're okay.
Yeah,
but your $500,000 gives you a 3-month runway because your burn rate and this and that. It's just like you're not doing okay,
right?
There's just a lot of that. They don't really know, and they don't know that they don't know.
Okay, so for as much as I extremely dislike Robert Kiyosaki, there are some things that he says, and the one thing that I think it was Robert Kiyosaki, but he defined wealth as how long you can live on what you have already.
I like that.
Right. And I'm like, that's a great, I like that.
That's your runway.
That's
that's exactly
so
what
he's like, your wealth isn't defined by how much you make. It's about how long you can live on and not
how long will your cash last?
Yeah. And so I was like, all right, that's fair. So for as much as I don't like him, there's a lot that I don't like. And I really don't like Robert Kiyosaki telling middle America to get in as much debt as they can.
So what you're saying is you don't like Rich Dad Poor Dad or Robert Kiyosaki?
No, I don't.
I think I've heard that a couple of times.
Yeah, I'm like freak, dude. But just the whole debt thing also pisses me off. I'm like, oh my gosh. Anyway.
Nice.
But anyway, no. I mean, a lot of people love him. I mean, I guess if he helped you, hey,
it's a tool.
Yeah, I guess if he helped you, then I can shut the hell up because I'm not. And by the way, he's rich as hell.
Yeah.
And I'm not. So, all right. Dude, so do what you got to do, man. Yeah. Anyway, it's wild out there, but, dude, I really appreciate, your view on things, but tell me what do you think business owners should focus on if they're just starting a new business, from a financial standpoint, because there's a lot that you need to do when you start a business, but maybe a basic thing that they can start doing that would benefit them greatly, maybe by the time they need to meet with someone like you.
Yeah, from a financial standpoint, I think the biggest thing is just to really ask questions. if you're doing your own books, or if your uncle's doing your books, or your ward member, or your neighbor, ask questions. Hey, help me to understand this. Help me to see, if I do this, if I go buy this, or if I put money here, how's that going to affect me? How's it going to affect my financials? How's that going to affect my runway? And if they can't answer those questions, find someone who can. And I don't care if you're a startup, $5,000 a month or $5 million a month, you've got to be able to ask questions.
And so for everybody listening who doesn't know, define runway and define why that's so important.
Runway is how much cash you have and how long that's going to last. For example, you have $500,000, it's going to last you a year. Then that means you have a year's worth of cash. That's your runway. Why is that so important? Because what happens if COVID, or something else, COVID you've got to be able to know how long can I last? And then if something crazy happens, be it good or be it bad, how is that going to affect my runway? How is that going to affect me as an owner? And what kind of levers can I pull, turn, knobs, everything in order to, extend that runway?
So you're saying runway is like, you have $500K in the bank that lasts you a year if no other money comes in.
Exactly. That's
which is a really important stuff. Which is really important because sometimes you don't, right?
That's a lot of times people will say, hey, they'll contact me or someone at Amplēo, say, hey, I need to go raise capital. Well, let's really find out if you need to raise and then how much you need to raise. And really that how much is a very important question.
How do you determine how much you need to raise?
Financial modeling.
Yeah.
You have to really go in, you have to dig in, you have to really do a lot of scenarios because a lot of people raise based on, hey, I want to get me to my next round, in 18 months.
Right.
No, that's okay. But let me tell you a better way is to raise based on metrics, based on specific goals. Okay. I want to be able to raise, X amount that will get me to this point as far as launching my, version 2, or something like that. Then that's really a good way. And you only can know that and how much by doing a financial model.
A lot of these SaaS companies do it the first way you mentioned. They go seed to seed.
Yeah, exactly.
And you're round to round. And I think that's why we've had almost 500,000 layoffs in tech. It's kind of crazy.
One of the things, and I hear this repeated a lot. I used to say this in my, when I would just help people personally with their finances, which I don't do. It's just, only for friends. So please don't call me and ask me to help you with their personal stuff. But I hear this a lot more recently in business. So and I'll start with the personal and I'll tie it into the business. So as far as personal, use credit when you don't need to. Don't use credit when you need to.
Right.
That's how you build your credit, right? In other words, if I am hurting, if I am out of money, it's too late to try to get a credit card. Okay. But when you have money in the bank, get a credit card, establish, get your credit and everything going. It's the same thing for business. Raise capital when you don't need to. Okay. And then, because when you need to raise capital you're out there, you're screwed. Because, then you don't have that negotiation tip.
Yeah, that's true. I was just, I do a scholarship for, entrepreneur scholarship for students in my old high school. And that's what I told them yesterday. I was like, you guys want to know a secret of negotiation? I said, they're like, I go, it's positioning. If you can't say no, it's a bad deal.
Get the upper hand.
Well, if you need this money and they know you need that money. And by the way, they don't need to know anything other than, why are you coming to me right now?
Yeah, exactly.
Why are you pushing so hard for this?
A lot of times companies will raise capital, and this is the right way to do it. They'll raise capital because it'll help them to get to the next level. They have tons and tons of money in the bank.
And they have a lot of runway.
But they're saying, hey, you know what? I can get there faster. If I do this. That's great.
That's how, that makes sense. You're like, don't use your own, use somebody else's. It benefits everybody.
Hey, leverage.
But at that point, it benefits everybody. They know that they're going to get paid because if V2 comes out, you already have a healthy company who's got runway 0, who's got all this stuff. And then you're going to really get and then you're going to get a more favorable deal for sure.
When they want that deal.
If you can say like, look, dog, we don't need this. We want this and we want you to be a part of it, but we can say no at any time in this deal.
Exactly.
And walk away. So I learned that was probably the biggest negotiation tool that I ever learned. That's probably the only one that I share with people too. It's like, want to be a really good negotiator? Yeah.
Yeah.
If you can't say no, it's a bad deal.
There you
That's
go.
it. That's all you need to know.
You can't say no, it's a bad deal.
Yeah. Yeah.
Remove the emotion.
Well, and yeah. And if you just like, if you can't walk away, if you're not ready to walk away, then you shouldn't be involved in this deal.
Do you know Robert Kiyosaki talks about that?
Does he? I heard it from
And a lot of people.
Yeah. I heard it from Chris Voss. No, but I'm just
razzing you.
No. Good for you though. I need to be checked. No, but I never said, okay, but hold on. I only said the finance stuff. I said it was a great book if you wanted to and to learn, because Robert Kiyosaki is obviously smart.
Yeah.
I just don't like it when you tell.
I'm sure he's not listening to your podcast.
Absolutely not. Robert. No, absolutely not. But anyway, yeah, it's just when you tell, I just get so many friends who like, I see their businesses and they don't have any runway. They're negative runway, dude. You know what I mean? And then they're like, oh, Robert Kiyosaki told me to go borrow $1 million for this house and it'll generate all this money for me. And I'm like, but you shouldn't do that though. You should probably not figure out how to diversify your portfolio. You should probably figure out how to get a portfolio.
Yeah. Make sure you're not the Walking Dead first.
Dude, yeah. You shouldn't figure out how to invest. You should figure out how to earn money. Because people will come up to me sometimes and be like, what's the best that I could do with $1,000? And I go, buy a course and learn a skill.
Yeah.
Like, why would you put that in anywhere? It's not like $1,000 isn't a lot of money in the S&P 500. Like, go figure out how to turn that into more money. You know?
Right. So, oh my gosh. On that note, Chris Riley, he's one of my favorites.
I don't know Chris Riley.
He may or may not be listening to this, but Chris, you're awesome. I've talked to him quite a bit. Okay. He's an FP&A guy. Okay. Paul Barnhurst, both of them, they tag back and forth. So they're both incredible FP&A guys, and they both have amazing, what's it called? Like courses out there. Mm-hmm. So I can't remember how much, it's like a couple of $100. Sure. On a course, on one of Chris's courses. Yeah. Absolutely, hands down, one of the best courses I've ever done. Just on like, was it like financial modeling, leverage buyouts? Okay. Yeah. I think, what I think would be cool is taking the Robert Kiyosaki model or the Grant Cardone real estate model and applying it to businesses. Oh yeah. There we go. Right. Well, a business return, like businesses have always outperformed real estate in like returns for the most part, unless you're buying and selling it, but like the rental model, like businesses you typically outperform. Well, look at commercial real estate. It's business, it's real estate, but it's but they move that. Oh gosh, dude. How about a commercial lease? That's a racket, dude. Not only are you going to pay me, you're going to pay me for the square footage, but you're going to pay me the cams. Right. So literally you pay for all of your own stuff and I get the money. Yeah, exactly. There's a deal. I was like, that's a sick deal. You can't do that. Yeah. You're going to go. I mean, I guess you can, but to be in the rental market, to be pretty competitive, I feel like you have to like pay for some of that. But anyway. One of the reasons why I love quality of earnings and financial due diligence is seeing businesses and really seeing so many of them, learning about, like what makes them tick, but then also, there again, you've got all the different industry metrics and stuff that you can apply to those. But I love, what's the industry to be in right now? Wow. E-commerce and SaaS. Dude, no kidding. They're just huge. Yeah. Especially Silicon Slopes area. Yeah. But all over, E-com right now is big. Retail's never dead. Yeah. Retail never died. Exactly. For, everybody was like, oh, the malls are going to die. It's still malls might die, but retail's not dead. Retail specifically is really capitalization. It's cap heavy. It's capital intensive. But where SaaS, SaaS is pretty cap heavy. It is, because you got your developer. You got to do your developer. But if you really have a great offering, then you've got the options. Well, and once you get past your devs. Then you're pretty much like, there you go. Yeah. So I would agree with that because e-com, you got inventory, you really have to double down on marketing to push that out. Marketing. You've got it. That's a big budget for e-com. We got to talk about that afterwards, but dude, it's e-com is great though. I have a lot of friends. There again, look up Matt Holman and plug into Sharehouse. Absolutely. Sharehouse and Catalyst. Oh my gosh, dude. So many good
players out there.
There's a plug for you, Matt. Love you, buddy.
Right on, bro. All right. Well, hey, thank you so much, Patrick.
Hey,
I appreciate you being here.
Thanks, Dalton.